It's great to be here. Thanks for having me on the show.
So what jumped out to most people is the fact that prices were up maybe double digits, volumes were down significantly. Is this the end of the road for you guys in terms of price hikes?
One of the things we're most proud about is this past year we eclipsed $20 billion in sales for the first time and grew sales 10% and earnings per share 10%. So we just had a great year. As we look ahead, it's very clear that inflation will still be with us. It's also clear inflation is decelerating. And so this past year, the cost of our goods were up 13%. Next year is going to be about 5%. And so the good news for consumers is that inflation is decelerating, but it's also not going to be a deflationary environment.
So, Jeff, what about the supply chain and the state of that versus where we've been? It was a difficult time during the pandemic itself. We saw some different patterns from consumers. Right now, how prepared are you operationally to deal with potential slowdown in consumer spending?
Yeah, John, I'm thrilled you're asked. The supply chain itself has gotten a lot healthier over the past 3 months. In fact, the number of disruptions we have is now similar to pre-pandemic, and our service levels are back into the 90+% range. And what that allows us to do is get back to more normal operating environment, which allows us to innovate for consumers, which allows us to turn our marketing on, and which allows us to go back to the productivity savings we have had before. And so we're actually looking forward to this new environment, and we're confident we can drive demand for consumers.
So circling back then, if you don't think the inflationary environment is over, does that mean you'll continue to pass through some price hikes? And are you worried that consumers seem to be responding by choosing other products? Maybe it's generic products, maybe they're just skipping occasions.
You know, what the most remarkable thing about consumers has been how resilient they've been over the course of time. And they should be, because unemployment is very low, as we well know. Savings rates are high. And so the consumer's been relatively resilient. Having said that, they're also nervous about what lies ahead with regard to inflation. And so given the backdrop of everything consumers have had to deal with, we're quite pleased that the sales have held up as they have been. As we look ahead, one of the most important things is going to be what are consumers going to do eating away from home versus eating at home. And usually when they get nervous about prices, they come to eating at home, because the price of eating at home was about 3 times less than eating out. And so we think that has driven demand in our categories. We think that'll continue to drive demand in our categories.
Jeff, how sticky are some of the changes that you saw in consumer behavior during the pandemic? I was hearing about like a revolution in cereal, right? Like people rediscovering cereal because they were at home. I mean, have you seen slippage on that? Are there certain tastes that people are leaning more into or less? Do people care about sugar anymore?
You know, we have seen demand for food at home remain really sticky. In fact, about 86% of food occasions are at home, and that's about 3 or 4 points higher than it was before the pandemic. So we have really seen demand really be sticky. That includes breakfast cereal, and we've done really well in the cereal category. We've got some great new innovations coming this summer, including a mini version of Lucky Charms. So we feel good about our prospects there, as well as many of our other categories like pet food and Nature Valley granola bars. And so we see demand continuing and consumers are continuing to eat at home.
As long as it's not shrinkflation with the Lucky Charms.